issues. So in this video, we're going to cover a company that is attempting to address men's issues, men's rights. Because in my opinion, every person in the United States deserves special attention. We are going to cover HIMS stock. How did I first discover this stock? Well, I'm a finance YouTuber, and I had this guy that I used to watch all the time named George Perez. And if you don't know who that guy is, if you don't remember, he had intros that went kind of like this. Oh my God. Hey guys. That was George Perez. And he talked a lot about HIMS stock. And I didn't really know anything about it. But I quickly looked at the financials back in the day. And I said, oh my God, this company is just losing money hand over fist. This is insane. Why would you buy a company like this? Well, I keep seeing these comments on my channel telling me to look at HIMS stock again. So let's go check out HIMS stock and see what we have to see what I have to say about this. So first of all, HIMS stock has not done too well, and specifically, it's HIMS and Hers Health. HIMS has collapsed 37% since its IPO'd. It looks like it was probably a SPAC. We could see that it just traded for almost nothing, probably a cash value. And then it shot up probably when it merged with its parent company. And ever since February 5th, 2021, where it reached a high of $23.99, and where I'm sure a lot of you bought the stock, it has since collapsed down to $6.11. Now, you have to ask yourself why. Why did this stock collapse? Why did it go up so massively? Well, first of all, remember, we were in a clown market in the 2020 and 2021 era of the stock market. Every stock, regardless of how good or bad it was fundamentally, went up massively. And I was sitting there and saying, there are no fundamental underpinnings to a lot of these companies. And this was no better highlighted than with Cathie Wood and her ARC, which has since imploded, of course. But we're talking about HIMS here. So here's HIMS. Let's go ahead and check out the HIMS website and see what they're all about, okay? Because you kind of want to understand a company a little bit. But the way my investment process works is I dollar cost average into index funds, and I keep 5% of my money for speculative bets. I am not a shareholder in HIMS stock, by the way. So we're here on the HIMS website, and we can see they provide personalized doctor-backed treatment plans. You can get treatment for you-know-what dysfunction. Ooh, maybe I'll have to look into this. Hair loss. Apparently, I'm going bald, but I don't know. I guess I'm going bald. Anxiety and depression. I get that all the time from watching finance YouTubers succeed. Early, you-know-what, and skincare. Now, I do skincare, and it's called washing my face and washing my butt crack. But that's neither here nor there. But you can go on this website, and you can get a treatment plan. You have a consultation. You can get prescribed something, and boom, there you go. Hassle-free. Now, here's how the process works more specifically. So you start with a free online consultation. You get a tailored, effective treatment plan, free shipping on prescriptions, and ongoing care from licensed providers. So instead of having to go to a doctor, you're going to go to the doctor's office, you can just come on the website and buy some HIMS. I'm not going to knock the concept. I mean, I know lots of guys struggle with this. And I'm not saying, obviously, I don't because I have 2 kids, but or they chads. But a lot of dudes do. And I can see how, like, if you had this issue right here, you'd probably be a little depressed. You probably feel like less of a man. And if you had that issue, well, you probably have this. And I guess this wouldn't be pertinent at all. So what do I care about? I care about the fundamentals of the company. I don't care about the story. I don't care about twinkly eyes. I don't care about, oh my, George Perez. Oh my God. The only thing I care about is the fundamentals. And if the fundamentals look good, then I'll do more research. But if the fundamentals are trash, I'm not doing any more research. So let's look. So here's HIMS and Hers Health Inc. HIMS. We can see that right on the top line of the income statement, they have pretty significant revenue growth. And I'm talking about explosive revenue growth. Look at that year-over-year growth. 104, 93, 87, 95. Can't hate on that, okay? And look at that chart right there. Boom, 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 boom. Pretty incredible. The next thing I like to look at is the gross profit. How high is their gross profit? Their gross profit is the actual cost of the good you sell, which it seems to me is probably the consultation services. Okay, I don't know if they specifically, well, of course they don't produce the prescriptions. At least I don't think so. But their cost of goods sold, their gross profit is insanely high. And it's actually gone up recently. So I don't see a massive deterioration on the top profit margin of the income statement. However, we run into a problem towards the bottom of the income statement. Gross profit is the first thing that you calculate, but a company's true profit is on the bottom line. Operating margin is your profit before interest and taxes. And here we can see from the core business, this company has never turned a profit. Now, they've had some huge losses. We can see in the first quarter of 2021, and looks like the second or third quarter of 2019. We can see that they've had some huge losses. Okay, those were probably some kind of accounting write down, impairment, something like that. But even then, if you just average out the losses and you look at every single quarter, they're consistently losing money every single quarter. When you buy a stock like this, you are gambling. Let's go look at the bottom line profit. This is after interest and taxes. Same thing again. They have never produced a profit. However, they do have some free cash flow, albeit a very small amount. Your free cash flow is your operating cash flow minus your capital expenditures. Well, there's multiple ways to calculate it. Free cash flow to equity, free cash flow to firm, whatever. We're not covering that right now. Let's go look at the balance sheet. You want to look at the balance sheet to look at the financial health of the company. The balance sheet is a snapshot at a point in time that tells you the financial health, the liquidity, the debts, all of that of the company at one point in time. Their most recent financial statements were on September 30th, 2022. Let's look at their current ratio. They currently have $233 million of current assets, mostly in cash and short-term investments, which is better than having a lot of inventory. Okay, they have a little bit of inventory, nothing horrible there. We look at their current liabilities, $66 million. So overall, they're probably not going to go bankrupt. They have sufficient cash, liquid cash, or stuff that can be converted to cash quickly in order to pay off their short-term debts, assuming this information is accurate. You always want to check the 10Q, the actual financial statements, because sometimes these aggregators can be wrong. Let's look at long-term assets and compare those to long-term liabilities. We can see right here that they have $150 million of long-term assets. I don't know if that's goodwill or intangibles. I wish they would break that out here. But most of their assets are intangible assets. Those could be copyrights, trademarks, or it could be goodwill. And they have only $5 million of long-term liabilities. So overall, I mean, their balance sheet doesn't seem that bad. They aren't underwater on their long-term assets, and they have sufficient liquid capital, capital, to pay off their short-term debts. Now, let's go look at the equity section of the balance sheet. Let's see what's growing here, and let's see what's not. Well, we can see this common stock account is growing every single quarter. What does that mean? That means they're issuing shares. They need to generate cash. They're generating cash, it looks like, from issuing stock, diluting the shareholders. Let's look at their retained earnings. This is their accumulated profit and loss since inception. We can see their retained earnings is going more and more and more negative every single quarter. And that makes perfect sense because they're losing money every quarter. Okay, so we can see their shareholders' equity is declining. They must have had a huge share issuance right here, I think, whatever quarter this was. We'll go look at the statement of cash flows. But overall, this business is burning equity. Why? Because they're losing money. Shocker, right? Let's look at the statement of cash flows. So we can see their operating cash flow is kind of all over the place. However, they just turned their first quarter, it looks like, except for this one back here, of positive operating cash flow. They had $6 million of positive operating cash flow in the last 3 months ended September 30th, 2022. However, I see a big number here. Share-based compensation. Seems to be prevalent. What is share-based compensation? It is the value of the shares, stock in the company, issued for the purpose of compensating the executives, employees of the company. So they're issuing shares, it looks like, not to acquire new assets, patents, trademarks, blah, 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 or, acquire other businesses. They're doing it to pay their employees. So you're enriching the employees and the executives, and you're getting diluted for it. Good job there, buddy. Let's see what percentage of their revenues is share-based compensation. So it's roughly 10 here. We'll go 11. So it's not a huge amount. Let's see. 11 divided by 144. Roughly 7, almost 8% of their revenue is being eaten up by share-based compensation. And that is a legitimate expense because you are being diluted. But dilution doesn't matter, right? Yeah. Okay. So we go in the statement of cash flows. Let's see. So they have operating cash flow. I don't know if that's a fluke or if they're going to continue to grow their operating cash flow, but it's been pretty consistently negative for the 4 quarters before that. Let's see what they've done on the investing side. Okay, so they had really nothing going on in the investing. They did have a pretty big acquisition in this time last year, in the last financial statements. They acquired something for $45 million. That could be potentially why they have potential goodwill on their balance sheet. We couldn't tell. And we can see they're generating cash flow from financing. They have cash coming in, probably from employees executing stock options. Now, overall, do I think this company needs to dilute at this point? No, I don't see them. And like I said, I don't know these companies' future plans, but right now, with all the information that I have, I don't see a big dilution event coming. They're not burning a horrible amount of cash from operations. And you go look at the balance sheet, and they have plenty of cash and short-term investments to cover that. So unless they're going to acquire a new business or, I don't know, maybe pay off a little bit amount of debt they have, which is almost insignificant, they're probably not going to dilute you except for stock-based compensation. But therein lies the problem. They are still diluting you. Instead of paying their employees with all cash, of course, they're paying their employees and their executives, they're also diluting the shareholders. Let's look at some of the financial ratios. Okay, let's see. Market cap has collapsed, obviously, because this stock has been pummeled. Price to sales, lower than the historical average, but I don't know, still kind of high for an unprofitable company. It should be 0. Price to books has gone up. Why? Because the price has roughly stayed the same of the company, the market cap, and the book value, the book value of the company has gone down because they're losing money. Debt to equity ratio, insignificant. They don't have a big debt problem, and they have a very, very, very solid current ratio. So overall, is this business going bankrupt in the near term? No. Do they have high explosive revenue growth? Yes. Am I going to potentially buy this stock at some point? I don't know, but I can tell you I'm not going to buy it right now because what I see is they're losing money every single quarter. And I want you guys to understand this. If a company doesn't make money, why are you investing in it? And you're not even investing, you're speculating. Because what if this business never turns a profit? What if they never prove that they can ever become profitable? Why would you put your money into that? If you want to do it for a speculative play, sure. They have great revenue, high gross margins, not a lot of debt. They finally have positive operating cash flow. We'll see if that lasts. But they're also losing money and they're diluting you. And roughly 8% of the revenue is from stock-based compensation, not to acquire other businesses, not to grow their brand, but to compensate executives and employees. I don't know, ladies and gentlemen. What do you think? We'll do some comments. Only if my daughter doesn't wake up. Chris, stop your video. Soy boy company. Well, I can tell you, I've seen worse companies than this one. Strong man, my gigantic man. I actually use HIMS, guys. I have issues. 5% in HIMS. I don't have any money in HIMS unless it's in VT. All YouTube stocks have a massive run-up, then collapse. What a shock. Imagine that. Imagine if they had YouTube in 2000. Intel and Cisco is the future. Yeah, just kind of like Tesla. I see you in there, Sasha, by the way. LaFufu is did he ever talk about HIMS? I would not be surprised if he did, but I don't remember him saying that. I think LaFufu just realized there is not a recession for most of the stocks. The recession is only for clown stocks. Yeah, and as a genius, strongman personal finance, I called it. Stop wasting your time on stocks and analyze some JPEGs of monkeys wearing funny hats. That's where the big money is to be had. It's true. It's really true. I can't deny that. You know, and better yet, when you make $1 million off of NFTs, you can literally give your mom a JPEG of a dude with a stupid hat on and then tell her it's worth $100,000, and then the price will collapse by 95%. But it doesn't matter, right? Because, you know, you hooked up your mom. Strongman, would you do a stock analysis live stream? I mean, this is kind of what I'm doing right now, aren't I? Oat prices are going down. I might do an Oatly video where I actually go into the supermarket. Tattooed chef. Everybody's talking about tattooed chef and Jeremy in the comments. You don't research before you make the video. Kathy Wood used to own this company. She made me lose a lot of money. I don't have to research before I do the video. I can just look at the financials. It's easy to me. I can tell you if it's not a good investment just by looking at the freaking financials. He looks at profitability management and many things. I'm confused. Why are you looking at the balance sheet of a company? Surely a better way to know is going to the mall and seeing how busy the parking lot is. I'm just an idiot, I guess. Chris, any thoughts on Schwai International? I mean, I can do that in another video, but I mean, I buy VT, bro. HIMS needs to be a good spec play. Seems to be, I laid out the reasons why it's okay, but they've never made money. So keep that in mind. Boss man's mama. What is your opinion on Carvana? I was actually going to do a video on Carvana, and then I got bored. Maybe I'll do it again. We'll see. But my opinion was not very high, I can tell you that. Thoughts on LaFufu telling everyone to stop bothering him about Tattooed Chef. Interesting that he's down bad after pumping it. Now people want answers on why he wrecked their portfolios. Tell them to get lost. Oh, I'm going to put out a video today unless my precious daughter wakes up. And I'm going to talk about this new concept that I have, this defeatist attitude that I have adopted about YouTube. Balance sheets and P&L are irrelevant compared to whether you believe in the stock. Hey, man, you want to make money on YouTube? You do that right there. Right there. Why did you claim that Sprytac pants let me call yourself a lord? Because I wanted to make money, Cole. That's why. I don't care about any of you. Sprytac is a worse grift than anything on YouTube. Oh, my God, pants. What stock does Johnny Holmes? Who is that? Is that another grifter on YouTube? Yo, react to Jeremy's latest vid. Oh, God. Can this company just go bankrupt, please? Oh, God. I know what you mean. You've given me the pill. Take it, baby. Take the pill. All right, guys. A couple more comments I'm getting out of here. I'm hungry. What finance channel on YouTube do you respect? That's a tough one. I have a couple of buddies that I roll around with, so you can go check out them. They're all linked into my channel. You can see them. I still believe in Tattooed Chef stock because of the skews. I was going to use HIMS instead of going to a doctor. Still a crap stock, most likely. I mean, I can see why it would appeal to people, you know, but I don't know. I don't like the stock. 90% of YouTubers have already apologized for being sponsored by Sprytech. Imagine if finance YouTubers actually made money from their investments instead of a course. LOL. I got to start my accounting course, man. I'll do like debits and credits, and I'll be all professional about it. I'll have a suit on. Oh my God, strong man, here's money. Ooh, ooh. Why do you keep skipping over me? What did you say? What's your favorite small cap stock? I don't know. Honestly, I can't tell you. I don't know. I haven't been looking at a lot of individual stocks recently. YouTubers make money from ad revenue and courses. That's true. Ad revenue is like 100% of all my revenue, even though I did have a little grift course going on for a little bit. Sven Carlin is king of investing. No, he's not. All right, guys, that's it. HIMS stock, there you have it. I know, boring numbers, financial statements. It's just buy the story, bro. George Press. And you guys have a wonderful, delicious day. Cheers.
Oh, merry stock market. Oh, man.